Hello, welcome to this preview of week 37 2023. I'm joined by Connor Woods, and obviously unfortunately it's just the two of us today because unfortunately Shane is on vacation for the whole week, so you're just gonna have to put it with the two of us. How are you doing today, Connor? Are you well?
He's skiving. It's disgraceful. No, yeah. Hello to everyone. I'm doing well, Nick. Yeah, it's been a good week in the markets. It's been boiling hot in the UK. It's been tough to it's been tough to be in a
Yeah.
confined office trading, that's for sure. But the price action's been a little bit messy, I think, on the FX, but good on commodities. And I think next week's gonna be big. So yeah, I'm doing well. Yourself?
Yeah, I'm doing well. Like yourself. It is very, very hot in the UK. If you're watching us on YouTube at the moment and you're not in the UK, then we're not used to these sort of temperatures over here in the UK, and it has been blisteringly hot. And I'm right at the top of a building as well, obviously with like sloped walls right in the roof, and the sun just comes down and it just heats the whole thing up. So yeah, we're not kind of used to it. So it has been a bit of a sticky week, and also the sticky inflation around. And we're going to look at that because next week, of course, is a big week for inflation. So we're going to start. Well, we had a bit of a chat beforehand. We're going to look at two key markets for you this week, and they are going to be the gold market and also the euro against the dollar, because there's quite a lot of stuff around the dollar with the US inflation next week, and then of course there's an interest rate decision out of the ECB. So let's start with the gold market, Connor. First up, just give us your overall opinion of it before we just jump into the price action.
Well, in terms of fundamental event next week, obviously it's US inflation on Wednesday. Is it Wednesday? I believe
Wednesday. Yep. So
that
US
will
inflation
probably
Wednesday.
be that will probably be the biggest driver for gold, and that was my thinking in terms of the interest in it next week. In terms of what we're expecting, well, we spoke about this, didn't we? And there's quite a high expectation for CPI. Funnily enough, I'm not quite sure where it's come from, because we're seeing weaker data in the US, and you'd expect that would correlate to correspond to weaker inflation data. So 3.6% year on year is the forecast. 3.2 was what we had previously. So that's quite a big uptick. 0.4% month on month increase. Now, this is just what I found. It's not a barometer for anything, but we've only had one time since November 2022, one time where inflation year on year beat the forecast, so came in higher than the forecast. In the last five, it's all been below. Yet we've got a 0.4% higher expectation than previously. Yeah. So my thinking is, does that set up for a weaker dollar potentially? Yeah. I know you're going to talk about that as well. How that feeds into gold prices? Well, what I've noticed is we know dollar's been on a great run. It's had a beautiful breakout, bullish on the dollar broadly. Okay, fair enough, no issue with that. But during that time where we've had that remarkable run in the dollar, if you just notice gold prices here, they've moved down, but not as much as the dollar's moved up, if you see what I mean. I know they're not perfectly correlated. So that tells me that there potentially is some underlying gold strength here. We're reacting beautifully from this yellow line. That's that 200-day moving average. Look at that candle where we closed. We tried to have a go at it 2 days ago, failed. Reacted yesterday, closed just above. Today's that breakout candle back above that 200-day moving average. Does this set up a move next week if we were to get disappointing inflation data for gold really to come and have a go at 1950? That's probably going to be, if my drawings work. Here we go. That's probably going to be my target for that situation. If that doesn't happen and the forecasts are right, then okay, maybe we could see dollar grind lower. I don't think it's going to be anything impulsive. Maybe down towards this 1900 level, for me being the real floor of the market as any target to the downside. If we get a break below there, then okay, I'll change my mind. But until then, I think I'm still bullish on gold.
It's a really interesting market. I totally buy into exactly what you're saying there about, number one, about how inflation expectations have been priced the way they've been priced, but the market has not been delivering that consistently time after time after time. And also, when you start to pick up a pattern like that, how you can see that bullish underlying strength in gold, because the dollar has been trying to price those expectations in on inflation, and it's just and gold is just not it's not playing ball anymore. We're not getting too much downside in the gold market at all as a consequence of that. So it's definitely it's definitely an interesting market for next week. Really interesting to see how gold is just pushing up at the moment. For me, upside potential on an intraday move here, maybe into the early part of next week will be about 1936, something like that. So I'm totally in your camp. I think that the upside potential on gold here is definitely there's definitely something in it for the course of the week. So that's the gold market. Now, next I want to just talk a little bit about the ECB for next week. This is going to be potentially going to be the last hike in the potential last hiking cycle that we have from the ECB. There's a few interesting things around this that I'd like to just touch on. First up, obviously the interest rates in the euro area are currently sitting at 4.25%. I'd like to just note that there is room in the tank to actually do that if we do need to do a hike. It's a difficult call though, and the reason why it's a difficult call is the hawks will be piling on a lot of pressure at the moment, basically looking for one more hike before the data comes in and says, okay, well, we shouldn't be hiking anymore, and their hands are tied. Christine Lagarde, though, she has been firmly in the data-dependent, slightly more dovish camp since July. Obviously, we didn't have an interest rate decision from the ECB in August, so that puts a lot of focus around this September decision. Now, there's some sort of economic thinking saying that we're almost starting to move into a period of stagflation in the euro area, really defined by low confidence and sentiment indicators, basically showing that there's not a great deal of growth going on, whilst at the same time we've got this sticky high inflation. Inflation in the euro area is still sticking at around about 5.3%, and it's not ideally where it needs to be. Now, a hike is potentially, I don't think it's a good idea, but I do think that we may get one, and the reason why I think we may get one is because in the July minutes, Christine Lagarde talked a lot about the way that the growth factor was less of an important focus for the ECB than the inflationary pressures were. So if you by just making a binary decision like that, what it certainly does is puts a lot more emphasis on if the inflation's the problem, that is what needs to be tackled. So therefore, I'm leaning slightly more on the side of saying there may be one more hike and maybe another 25 basis points, and then that will be it. And if that is it, that could be that will probably be at the last rate, certainly for this year. So on balance, I'm going to say that we are going to get a 25 basis point hike from Christine Lagarde next Thursday. The interest rate decision is on the Thursday. So having a quick look at the price action. Now, from euro dollar itself, you can see we've been in this really beautiful trend channel over the course of the year. It really has been a fantastic looking chart, not quite as beautiful. You don't usually get currencies that trade quite as beautifully as that, but what I will just note is that dollar strength of pricing in those expectations for US inflation has just pushed euro dollar to the downside. So I've got really two key scenarios. You can see all the interest rate hikes that we've got we've had from the ECB. If you had to pick a direction of what has the interest rate hiking cycle done to the euro, well, it's just slightly given it an uplift. That's what that trend is basically defining. We've sort of gravitated around that throughout the course of the year. As interest rates have been increased, you can see that has just generally just leaned the euro against the dollar in the upward direction. So if the US dollar has been pricing in expectations for an increase in interest rate, that is what this move is basically showing us here. And you can see we've broken out the bottom of that downward trend. So I've got two key scenarios that I would basically like to work with throughout the course of the week. The first is that if US inflation is higher than expected, then obviously we will get more dollar strength as a consequence of that. And if we then get no interest rate hike from the ECB, what we would do is we would expect the euro dollar to be very firmly under pressure. So as a result of that, we'd be looking for the bottom of this channel here to act as a form of resistance at some point during the week, and then we'll be looking to trade back to the downside, and that could set up a beautiful continuation move into the end of September. If the opposite of that happens, if we get a situation where the US inflation does actually fall, and given what you were saying before, Connor, that is some statistically the odds are in the favor of that, the US dollar is potentially a little bit too strong, and if the dollar's going to come off as a result of that, and we get a hike from the ECB, then the euro dollar will be very, very active next week. And so that basically opens the door to moving back across. It makes the break of this trend look like a false break. And then obviously we'll be looking to test the bottom of that again. And then we're looking at 110 by October, basically, I would say, if that's the case. So absolutely fascinating market, I think, for the course of the week.
Yeah, I think it's a big call. It's a big call to suggest that it's completely in the balance, isn't it? It's in the air, actually, in terms of what they're going to do, whether holding or hiking once more. But definitely, if they decide to go again, I would be surprised if we didn't see euro dollar move up to around 1.082, which is that 200-day moving average, which I had marked on my chart. Yeah, I definitely see that break of that channel though that you see. That you had marked, to me, it looked a clean enough break for me to suggest that, in the medium term there could be some more downside to come. Yeah. We've got there 1, 2, 3 candles below it. Yep. So it's pretty it's pretty, as you said, it's hanging on by a thread. But yeah, how much of that's been that interest, that higher expectation for inflation, how much has that already been priced in? We shall see. I'd imagine quite a lot.
Yeah. The key for me is really to understand, this is why picking over the minutes from the meetings can be really, really useful, because they always give you some sort of a clue. And the fact that they are not focusing as much on growth and they are focusing on the inflation, by deduction, you say, okay, well, is inflation contained within the euro area? The answer to that is clearly no. And it's far more a sensitive situation in Europe than it is anywhere else in the world, simply because of the fragmentation of how all of these economies connect together in Europe. So it does give us for me anyway, I'm going to go sort of like go on the side of saying that we are going to get a hike, and that could give us something unexpected. We get unexpected. We get something underwhelming in inflation as well. Then this is going to be a market that I would be wanting to bid all day, every day next week in anticipation of that. Brilliant. So that's two really key good markets to actually focus on, and we're now back fully in September price action, and it's definitely welcome given how pretty much dry the summer was, and it's not been an easy year to trade. How would you sum up your year so far, Connor?
I think August was pretty horrific. Yeah. To be fair, I'll honestly, to be honest, the first quarter of the year is probably one of my toughest for a couple of years. I got caught a few times trying to short the stock market because I thought, we were going to see not just a continuation of 2022, but I thought we'd see more of a breakdown in the economy and in the figures sooner than what we are seeing it. And that's fine. Sometimes you don't get it right. It's absolutely fine. It was just about reassessing and trying not to have any bias on that, which I've now managed to correct over Q2 and Q3. So yeah, it's been good. It's definitely been a learning curve. I'm still in the camp of I'm not entirely sure. It's been a year of narratives with AI. For sure has kept the markets afloat because I think it's really, really uncertain right now. Mortgage rates, etc., huge interest rate hiking cycles, ones we haven't seen, and I just struggle to believe that we're just gonna get away with it like it's nothing, because you never normally do. So yeah, it's definitely been a learning curve. I'm still on high alert, but over the last few months, I've definitely removed that bias I had from the start of the year, and that was what was holding back my trading. To be fair, so yeah, you.
Yeah, I mean, difficult year. I have not really enjoyed this year so far. I've struggled all year, and I've tackled the goals. We said back in January, always start the new year with goals. I've done that. I've tackled all of my goals, and my primary goal was to deal with thin markets, and I've done that religiously, actively trying to trade crude, which has not been a difficult market to work with. Been very, very painful at times, but I have sort of achieved the goal of tackling them. But from a trading point of view, I've had like one or two big trades, primarily the pound against the Swiss franc. But again, I've had problems with that as well. But I'm hoping for something that's going to give me some traction between now and December. Always bearing in mind the non-linearity of markets, which basically means you can get nothing for a period of time, and all of a sudden you can make your year in a couple of weeks. That's how how it works. So this idea that we just get delivered consistent outcomes throughout the course of each month to month, is you just don't get it. So you always have to remember that. So over the years you build your experience, and it's not a linear journey. So it can be a little bit lumpy. So there's still a lot to play for over the course of the next few months. And it'll be good to get Shane back to the table next week, because he's definitely usually a guy that really enjoys this period of time trading from now up to Christmas.
Yes,
it's been going well in the room as well. Just if you are watching on YouTube, thanks for coming and joining us. We'd just like to quickly mention our TST framework, which is our new trading framework that we've got in the trading room. It's been going down really well, Connor, wouldn't you say? I mean, the way that this is actually starting to help people that are new to trading, getting them on the right path with the right good habits, that's actually worked really well, hasn't it?
Yeah, I think 100%. I think when you look online these days, you're not sure of finding out information about any particular chart pattern or indicator or anything you like. But there seems to be a real lack of acknowledgement towards psychology, journaling your trades, understanding bad habits. So we've sort of come up with a nice little framework on MT4 using our 3 automated tools, which you can access in the trading room, download onto your platforms. And we've come up with a framework where new traders can come in, or traders that are stuck in a rut, traders that have developed bad habits, like we all have in the first couple of years. And we're just trying to smooth out that first initial process where, if I'd have known about this when I first started, the process of me becoming a profitable trader would have been 2 years ago. It would have been 2 years quicker. So we've come up with that framework using a support and resistance tool, pattern finder tool, and the risk manager tool, which is fantastic. And not just that, but then linking that in with journaling our trades, being accountable for the trades we're placing, even on a demo account. If you're a new trader, you don't want to just go on a demo account and press buy and sell randomly. Yeah, it's great to get used to the platform, but what's that actually achieving you? That's not going to get you ready. So this gets you strategy ready, and it gets you ready to learn the stuff that we've got in the academy. And actually develop, more reliable technical analysis strategies and journal those trades with our template. I think it's been really good. It's helped me. I know that sounds it genuinely has helped me. Especially the journaling and learning from your lessons and stuff. I love that. So
that's a weird thing about when you get something like that, and if you're doing it within a community, it's like it's easier to follow, because the group think of other people surrounding yourself working like that, you feel compelled to sort of join in, and they're good habits, right, that everyone should have. So that in itself is a really good thing. I'm really enjoying it. I'm surprised it's been as successful as it is, but I really do think it's a game changer in just getting everybody on the right path right from the beginning. So yeah, if you are interested in sort of creating, filling in that missing gap between knowing nothing and being ready to trade a strategy, or having a lot of bad habits and really struggling and then not being able to follow a strategy properly, and you want to go back and correct that, please do come over to howtotrade.com, join us, sign up for a free trial, all that kind of thing, get in the room, download the tools, follow the streams and stuff, and start fixing all the bad habits that you've got, start getting yourself on the right path straight away. Okay, well, that's it. Well, that's all we've got for now. So it should be a decent week next week. I am looking forward to seeing what happens with US inflation, and also what happens in the ECB. Week 37 is well and truly in the offing, and then we'll be pushing into October, and then that'll be it. That'll be it for 2023. So thank you very much for joining us today. Good luck with all your trades, whatever you're trading this week, and we will speak to you all very, very soon.